Let's bring back our panel, Craig Johnson of Piper Sandler, Joel Colina of Wedbush, and Brian Gardner of Stifel. And we still have so much to get to here before the end of the hour. We just talked about dollar right before the break. So, Craig, I'm going to come to you on this one because you got the dollar index falling below key technical level, 4-year low, and this decoupling again between the dollar and treasuries, which reminds me of Liberation Day, post-Liberation Day market trading last year.
You know, Morgan, this comes back to sort of Trump 1.0, 2.0 sort of scenario in here, and that Trump wanted a weaker dollar in his first administration. We definitely got that in the first year. We got that in the second term's first year also. So breaking below this kind of key technical support, we've got to be watching 96 spot, 35. That is the level to watch. It also is very oversold at this point in time. So from a technical perspective, we haven't been this oversold since April of last year and August of 2024. We're probably going to get a little bit of a relief rally in here, and I think that's how traders are sort of setting this up. So while the dollar is weak, we got to be very careful thinking about gold and silver as those markets have gone parabolic. But coming back to the dollar, look for some further weakness given this break in here over the intermediate term. Short term, relief rally. Intermediate term could probably trade down toward 95.0.
Okay. Weaker dollar, Joel. What does it mean for all these mega cap tech companies that are throwing hundreds of billions of dollars at AI build out?
Yeah, I mean, it just, most importantly, it significantly boosts our export competitiveness versus other nations. It's obviously going to trickle down to the bottom line as well. And again, as I stated kind of before the break, it just sort of reinforces tech leadership on a global stage, and it kind of plays right into Trump's playbook to kind of keep this engine humming along. And again, I'm not a macro expert by any means, but a weaker dollar historically just bodes very well for the tech sector, and most importantly, probably the most important companies on the planet right now.
Yeah, Brian, it's interesting because just a couple hours ago, maybe an hour ago, you had a senior official from the ECB talking about a weaker dollar against the euro. That's a sign of lower confidence in unpredictability in the U.S. economy. And whether it's the AI trade and the geopolitical implications of that, whether it's the ripping up of the foreign policy playbook that's existed for decades, or whether it is all of these trade uncertainties and new deals that are being struck right now, how does all of this funnel back into the financial markets?
In the short term, I think it has limited implications. The markets have been strong for quite some time. It was noted before. The economy is firing on all cylinders. Longer term, I think there are bigger questions. Trump has always wanted, I think, a weaker dollar. And I think in the short term, that has not been an issue. But longer term, I think it's something that we're going to have to watch. Certainly in the short term, as Joel just mentioned, great for exports. And that's kind of the Trump focus is fueling exports out of the United States, growing the economy that way. But longer term, the status of the dollar, the status of it being the reserve currency around the world, I think that is a longer-term issue, especially given the fiscal situation in the United States. So short-term, I don't think there are a lot of risks. Long-term, I think there are bigger questions. But investors don't care about the long-term right now. They really are more short-term focused.
Yeah, I guess speaking of exports, if you want to call them that, I mean, China giving a nod, Joel, to ByteDance, Alibaba, and Tencent to buy these NVIDIA H200 chips. Yesterday was the one-year anniversary of the DeepSeek tech shakeout here in the markets. So how to navigate these dynamics right now?
Yeah, it's like, God, I can't believe it's January 27th. Good call on that. Forgot about that. Yeah, it's the AI trade has just, come out of the gate strong this year. And to me, we had that first big kind of funding kind of headlines regarding OpenAI hit in mid-December. Probably didn't get enough attention given it was the holidays and people just sort of exhausted mentally, physically from just the dizzying pace of news flow. But again, you have more headlines overnight. SoftBank is, I think they're looking to raise another $30 billion towards OpenAI's funding goal. You have Anthropic is just what they've been doing over the past several weeks has just almost been unprecedented with Claude Code, Claude Excel, Claudebot kind of has gone viral in the past week or so. So the AI trade, I don't think it's ever been stronger. And I highly suggest everyone who isn't bullish, listen to ASML conference call, which is at 9 a.m. this morning. It's going to be incredibly bullish and just kind of reinforces that spending trends are accelerating and they're not slowing. And to me, that's what makes Anthropic's recent releases so critical it's just going to give people a lot more confidence to spend, and because there are real signs of ROI happening in the market.